Hey guys, welcome in this video. I hope that all of you are doing right. So in this video, we're going to do a trade breakdown video. It's been quite a long time that I haven't recorded a trade breakdown video because this is something that I normally keep more for our students within our coaching program. But I decided, you know what, this trade is pretty interesting. I think it can bring you guys a lot of value when I explain it. So I thought of actually recording a trade breakdown video for you guys. So I will explain you everything about the trade, the fundamental analysis, the technical analysis, and how I was able to catch a really nice move on CHF yen and how I was able to make quite a lot of profit with that. So before that we start, as always guys, please leave a like under the video. I would really appreciate it. And if you want to see more trade breakdown videos in the future, make sure that you do it because it will show me if you guys actually like this kind of video or not. And then make sure that you guys are subscribed as well to the channel if it's not already done. So let's get right to it. So we have CHF yen right here, which is a Forex currency exchange rate, right? And I'm going to explain you guys everything about the trade, as I said. So the fundamental analysis, the technical analysis, how I manage the position and stuff like that. So let's get into it, all right? So here we have the chart on the daily. Now, just to show you guys where I got in the trade, where I got, where I had my stop loss and where I got out of the trade, just to put you guys a bit in context. And then I will show you guys essentially the idea of the trade, right? So first of all, I took the trade around this level right here. I had a stop loss under these lows right there, and I had a target which was around here. Okay, so this was essentially the trade setup. As you guys can see, pretty decent risk to reward ratio, not the biggest one, right? Sometimes I'm able to get a lot more than this, but here it was good enough for me to take the trade. If it would have been a bit under that, I probably would not have taken the position, right? Because I have a minimum that I have to respect, but here it was decent enough. Now let's start with the fundamental analysis, right? This is really important. This is how I look at the markets personally. I always start with fundamentals and then look at technicals, and the idea is to wait for them to come together, right? Now let's look at fundamentals. So as I said, for the CHF, right, so let's start with the Swiss franc. The fundamental analysis for the Swiss franc is essentially very simple, right? A couple of months ago, the central bank decided to hike rates for the first time in 15 years. So this is something that is actually quite positive for the Swiss franc. And overall, it's a currency that tends to be strong within the current environment that we have with the markets. And it tends to overall gain value, right, over the medium to long term. If we look at long-term charts with the Swiss franc, you will notice what I'm talking about here, right? For example, if we look at USD CHF and we look at a very long-term chart, right? Well, we can see that overall it is in a downtrend, right? So I'm always more inclined to go with this direction rather than try to short, for example, the Swiss franc. So I was happy with this idea that my fundamental analysis and the overall direction that I was looking at for the market actually made sense, all right? So this was the fundamental part for the Swiss franc. Pretty simple, right? First time for the central bank that hike rates in 15 years. It is something that is extremely positive for the currency. It gives the currency a lot of strength behind it simply because it's such a radical change that they are making. So it makes it quite powerful, right? So that is for the Swiss franc. So I was pretty bullish on that. And then if we look at the yen, so the big problem, well, not the big problem, but the situation right now in Japan is simply that they are not facing nearly as much inflation as other places in the world, like the US, Canada, Australia, or things like that. And so because of that, right, they are not really in a position where they need to hike interest rates to actually control inflation. So what they're doing right now is simply that they are keeping rates very low. And it's, I would say, one of the only big places in the world where they are doing this. So as I said, US, Canada, Australia, Europe and stuff, right? They're all hiking rates because they need to fight inflation. But in Japan, they don't have this problem. So they are not hiking rates. And the fact that they are not hiking rates in Japan is actually something that is very negative for the yen in itself, simply because, well, if the other places are hiking rates, and hiking rates has a tendency to give strength to the currency, well, if Japan is the one of the only place, right, where they don't do it, well, it brings a lot of negativity around the currency simply because a lot of money is actually leaving this place to go into other places, for example, right? So overall, I was pretty bullish on the Swiss franc and I was pretty bearish or pretty negative on the Japanese yen, and all of this combines gives me a trade idea that CHF yen is going to go up, right? So this was essentially the thinking process. And whenever that I look to take a trade on the Forex market, I'm always trying to optimize everything in the sense that I'm looking for a strong currency to match it with a weak currency. Could be the opposite way around. It doesn't really change anything, but overall, I'm looking for a divergence between two currencies, right? I will never trade two strong currencies together or two weak currencies trading together, because trading a pair like this would simply mean that you are trying to see which one is stronger or weaker at a specific time, and it's not really what I'm trying to do. It's just way too complicated for no reason, and it doesn't really provide any good trading opportunities. So what is much better to do is to look at a currency that is strong, look at a currency that is weak because of fundamentals, and then wait for a technical setup to align with that, right? That's essentially how I trade. That's essentially how I look at the market. Again, right, all of this stuff, guys, normally it's just for the coaching program, right? I'm trying to give you guys a lot of value here. And my goal is to make my free content better than people who actually sell courses and stuff like that. And even if I have a program, right, well, that's the goal that I'm trying to do, right? Just make my free stuff better than the paid stuff of other people, essentially, right? That's the reason why I'm giving you guys so much value. And that's the reason why I don't really hold back on the example and really just tell you everything that you need to hear about it, right? So essentially, that's the idea. Now, if we move on from fundamentals to technicals, right? So now that we have established the fundamental idea that I'm going to look for higher prices on CHFJPY, let's do the technical analysis. So first of all, when we do the technical analysis, we always start on the higher time frame, and we just try to look at where the market is, right? So currently, as you guys can see, we had a big push to the upside here. So we had a big impulse here, we had a correction, and we were already in a pretty strong uptrend. So I got in the trade around here, as I showed you guys. So we were already in a very strong uptrend. This fundamental idea was already in play, and it has been in play for quite a long time. But my thought process was simply that since there isn't anything really different, well, this fundamental idea is most likely going to continue, and the market is most likely going to move in this direction. So the only thing really that I did on the monthly chart was simply to identify this high right here. It was a really important level because, as you guys can see, we actually broke above this level. We made a little pullback to retest the level, and then we went back to the upside. So this was a really important level that I was able to identify. And then if we look at the weekly chart, the only thing really here that I could add for the weekly chart are two trend lines. So we actually had this up trend line right here, which was, well, in itself not that interesting for this one, but what was interesting is that if we actually clone this trend line and have it like this, well, now we will have something really interesting, right? We can see that this trend line has actually been respected multiple times. We broke above it, we came back on the trend line, retested right here, made a correction, and then continued to push to the upside, right? So we got this impulse up right here, breaking above this high right there, and then this is when we actually started to make a correction. So now we can go on the daily chart, and here let's just add the moving averages and the RSI and the MACD, which are just indicators that I use. And so the first trade that I took, because I actually got two trades on this pair, the first trade that I tried to take was from this level right here. So I'll not explain this trade idea in details because it's the same fundamental idea, but it's just a different technical entry. I thought that this pullback here could have been enough, right? And that the market could actually have push to the upside from here, right? So this was the first try that I give for this trade, and I got out of the trade when the market broke under this 21 moving average and under all of these lows right here. So I got out of the trade around there. So this was essentially a break-even trade. I didn't lose money or anything like that on the trade, and the reason why, simply because I had figured out that when the market actually broke under all of these obstacles right here, that we would probably make a bigger correction, probably as a three-wave pattern, which is the most common one, and then maybe after that the market would go, right? So I decided to get out of the trade right here, and what was important to understand as well is that this was during summer, so we were in July, and most of the time during summer the markets are not really interesting and we don't really get a big move. So I was not really surprised to see the market reversing at that time and not really making the move that I was looking at. And I was like, you know what, let's just get out of the trade. There will probably just be a bigger correction and I'll have the opportunity to get back in later on. So I got out of the trade at break even, and this was a good decision because otherwise it would have been a loss around here. So after that, the market made a deeper pullback. And as you guys can see, the pullback is actually very interesting because if we actually fib this impulse up right here. Okay, so we can have the fib right here. We can see the market pull back all the way to the 382 fib level and also this previous high right here. So this was an interesting level that I was looking at. We also had the 50 moving average, which was just a bit above. So this was overall a decent area for a pullback. I was looking after that at maybe the 50% right here or this low with the 618, but it was really not a necessity for the market to go as low as that, since the fundamental idea was still quite strong and being priced in on the market. I was not necessarily looking for a massive pullback, right? So seeing the market break under this low here, hit the big level and then completely reverse right after that, it actually gave me a lot of confidence, right? And this is something that you guys will often notice on the chart, right? Sometimes you have a big level, the market breaks under the level, usually it takes a lot of liquidity, it takes a lot of stop loss, and then the market reverses and it keeps going in the initial direction. And so that's one of the reasons why I know very well these patterns and why I trade them. It's simply because it also makes sense regarding positioning for hedge funds and investment banks and stuff like that. So yeah, that's the idea. So essentially, right, the market pulled back to this massive level here and then reverse. And what I was looking at was this correction right here, right? We can see that we had lower points on the market, right? So this was the last lower points that we have right here, which could have been identified with a trend line. And so as you guys can see, what happened is that the market actually went back to the upside. We made a very small correction right here at the trend line level. We can see that it was respected multiple times. And we can see as well that the high of the correction here and here are actually very small and very close, I would say, to this high right here. So what I decided to do was, okay, I want to take this breakout here, but I want to wait for not just these little highs to be broken, but also this one. So overall, just get a stronger breakout, right? And so when the market actually broke above this level right here on the daily chart, this is when I got in the trade. So it was around here. And then as you guys can see, the same day, the market actually pushed above this high as well. We were not able to push above this one, but that was not really a problem. Just the fact that the market actually broke above this high actually shows that there is quite a lot of strength behind the move. So this was already good enough. So this is where I got in the trade. And then after that, my stop loss was simply under this correction right here, so this low. So as you guys can see, we had an impulse, we had a correction, we had a breakout. I got in the trade right here. It was also above the 21 and the 50 moving average, so this was looking pretty good. And there were a lot of obstacles above my stop loss, so it was a pretty safe place to actually have it, right? And then after that, as you guys can see, the market actually made a small pullback. Nothing to worry about right here. We went back up, we went back down. So for a couple of weeks, actually, right, the market didn't do much around this whole level here. And what was really interesting is that we were at the end of August, and August tends also to be a slow month. And then when we get into September, this is where people actually come back from vacation. This is where the market starts to be a bit more active and stuff like that. So I was not really surprised to see another correction at the end of August. But what I was telling myself is that if we don't really get the breakout early September, then I'm not really going to feel that confident about the trade, and I will probably just close it, right? So the timing of the trade is also very important, and sometimes I will have to manage the position according to that, depending on what happens overall in the world, right? So this was the idea. And so as you guys can see, early September, the market actually started to break, and here it completely just broke through everything right to the upside. We broke through the correction, and I had a very simple target in mind, which was the 27 fib extension right here. So this was essentially right the level that I was looking at. And then after that, what I also had on my chart was simply this trend line right here. So we can add this trend line from this low with this one, and then we can actually clone the trend line, and we can, whoops, not this one. We can actually clone the trend line and have it just like this, right? So we can actually incorporate all of these highs right here and this one right here. And so this gives us this kind of area there. So I was looking at the overall level of the 27 fib and the trend line, right? So it's kind of just a zone, right? It's not really a precise level or anything like that. I was looking essentially anywhere between 148 and 150. So this was essentially right the area that I was looking at. And so as you guys can see, well, the trade actually played out very nicely, right? In 1 week, we went from just being around break even to actually full TP, right? Full take profit. This was overall a 2.3-ish risk reward ratio, as I said. So pretty good, right? Pretty decent for a trade that didn't last too long like this. Yeah, so after that, it went to the upside. I decided to close the trade around here. Sometimes I have different ways to manage a trade that is in profit. Sometimes I will just follow the trend. Sometimes I will get out of the trade if I see that it starts to reverse. Sometimes I will just get out of the trade very aggressively if we actually hit a big level, right? Different ways to manage the position, essentially. And I would say it really varies, you know, from one trade to another, from one situation to another, depending on what I'm looking at, what I think is important, and essentially how I want to manage the position here. So in this case, right, I was really happy to get out of the trade there. I was also trying to match the exit with potential reversal levels on USD and other yen pairs and stuff like that, because it's just one big market at the end of the day, so I need to pay attention to other charts and stuff. But essentially I thought that this was a pretty good level to get out. As you guys can see, after that it kept going up a bit, but today it's really pulling back. So overall it's essentially around the level of where I closed the trade. But even if it keeps going up after that, right, for example, I'm still happy to be out of the position. If we get another pullback, maybe I can get back in, right? But even if it goes back up, as I said, I'm happy to be out of the trade. And that's really important to understand, right? In trading, there is no perfect system or perfect way to manage a position, right? Sometimes you will get out of the trade, it's going to continue. Sometimes you're going to keep the trade, it's going to reverse. So, you know, right, it's something that happens. It's something that is part of trading. It's not really something that you need to worry or that you need to stress about, right? It's just part of the game. Perfect decisions simply don't exist in the imperfect market. That's essentially the idea, right? So yeah, overall, that's the trade. As you guys can see, pretty simple, right? Just having a good fundamental analysis, a good technical analysis, waiting for them to align, taking the trade, being patient in the trade, because you know, I got in the trade right around the middle of August, and it completed around the beginning of September, so it lasted about 3 weeks. Okay, so being patient with the trade, not being too aggressive, right? Just managing the risk, and overall, well, that's how you get good trades. And if you are able to repeat this over the medium to long term, well, that's how you get good results. So I hope you guys enjoyed this video. I hope you got a lot of value from it, right? As I said, I really try to just share with you as much as possible. I think we really covered everything. That's essentially, as I said, the analysis, right? Again, my goal is to make my free stuff better than other people paid stuff, so that you can actually learn and that you can actually realize the value that we bring, right? If you get so much value from watching these free videos where I break down my trades, well, just imagine the value that you actually get within the coaching program, right? So it's just a way for me to show you guys how valuable it is and how serious we are about all of this. So guys, I hope you enjoyed the video. I hope that this brings you a lot of value again. If you did enjoy the video, please leave it a like. Don't forget to share it around. And on that, take care, trade with care, manage your money well, and I will see you in my next video. Bye-bye.